This is the simple trading strategy that I wish I knew sooner. And in this video, we're going to go over the strategy itself, the time frames that we use, the entry patterns we look out for, when to trade, and I'll also show you how to avoid bad trades. Now, when I first started trading, I was using EAs because I didn't believe that I could become a profitable trader. It just seemed like it was for a certain group of people who were specially chosen, which is obviously a ridiculous thing to think because there is nothing particular that successful traders have that me and you don't have. If they're able to become profitable, then why aren't we? You may already be profitable and just stumbled across this video, but I'm really talking about the people who are struggling to become traders because it isn't easy. And for me, it's currently taking a lot more hard work than I initially thought it would. However, it may not be easy, but it isn't impossible. So I do believe that I can become a profitable trader. And as long as you have that belief, then you just got to keep going. You just got to keep showing up, working hard, working effectively, and never give up. Now, one thing that's really helped me with my trading is keeping my strategy as simple as possible. But by having such a simple trading strategy, we can just do the same thing, rinse and repeat, and we can just focus on developing ourselves, our mindset, and our skills, and just let the numbers of the strategy play out. So this is the strategy itself. On the left here is the hourly chart, and on the right is the 1 minute. Now, today is Wednesday the 24th of September, and there has already been a couple of trades today. Yesterday, there wasn't as many trades because price was trapped in this range. We'll get onto that later. But for now, just to show you the strategy in its most basic form, what we're looking at here on the left is every one of these candles is an hour's worth of price action. So if we look at the bottom, we can see at 2 a.m, price opened here, pushed down and closed here. So it's a bearish candle. We then had more of an indecision candle after that. If we zoom right in, now this one was the 3 till 4 candle, and we can see that price closed just higher than where it opened. And then another hour's worth of price action at 4 a.m, price opened here, closed here, bearish candle. And what we're able to do with this strategy is we are able to capitalize during these hourly candles. So the way we do this is we are looking at how the previous hourly candle is closed, and then we're taking a trade based on that. So if we look here from 6 till 7, we've got a bearish candle. We can see that there. Price opened here, tried to push up, created a top wick, came back down, flipped bearish, tried to push further, but then closed back up here. So it has closed bearish with a top and bottom wick, but either way, it has closed bearish. So what we can do with this is when the new hourly candle opens, which is at 7 a.m, so we've just closed with the 6 till 7 hourly candle, we're now on the 7 till 8 hourly candle, we are able to take the information from this candle and use it to trade the next candle. So the previous hourly candle has closed bearish, 6 till 7. So when the new hourly candle opens, we will be looking for sells. And the main reason for this is the previous hourly candle closed bearish. That's pretty much it. Now, what does help with this sell is price has broken out of a range that we couldn't break out of previously for a good few hours, but we'll get into that later. Let's just look at it objectively that we have closed bearish on this hourly candle. So we take that information and we wait for the 7 till 8 candle to open. Now for this, we want to go to the 1 minute chart. So hourly on the left, 1 minute on the right. And we can see that while the 6 till 7 candle was open, we actually pushed up. That's what this bottom wick is here on the 6 till 7 hourly close. So this is where price opens at 6 a.m. It pushed up originally, and that's what this top wick is on the 6 till 7 hourly candle. It pushes up, it fails to push any further and then starts pushing down. Now near the end of the 6 a.m. hourly candle, we actually start pushing up again, and that's why we've got these top and bottom wicks on this candle. Now we can use this to our advantage because what we can see is price has tried pushing up, and when the 7 o'clock candle opens, originally price did push up and created a top wick on the new hourly candle. So this wick here is the 7 till 8 candle, the candle that we're trading. Now our bias is that we are selling because of how the previous hourly candle has closed. So after price has pushed up and created a top wick, which is here, that's bad drawing that, but that's where price has created its top wick. Now if we go to the line chart particularly, we'll be able to see that price during the previous hourly candle has been making higher highs and higher lows. We've made the highest point of the candle. Now with the line chart, you don't actually see the wicks, you just see the candles. If we go back to the candles, we can see this is the highest point, and this is the wick that's created on the 7 o'clock candle. So if our belief is the previous hourly candle has closed bearish, we believe the next hourly candle will also close bearish, then we are just looking for sell opportunities because our belief is that price is going to go down at some point. Now the entry on the 1 minute is this. Price has pushed up, created this top wick. We are then failing to break that top wick. So we haven't pushed any higher. So we've been making higher highs and higher lows. We've made this highest point. So then if price isn't going to push up and break this higher high, then why can't it go down? I mean, it can go sideways, but most of the time, if price isn't going to go up, it's going to go down, or vice versa. So this is where we're able to take advantage of this situation. So if we can't push past that higher high, we then make a lower low and then a lower high, which is here. Should be easier to see on the line chart. So here's the high, here's the higher low. So we're clearly in an uptrend. We then come up to make this lower high, which is lower than the previous high, lower high. We are then looking for the previous low to be violated, which just shows that there's bearish momentum in the market, which is what we're looking for because we've previously closed bearish. We are looking for these signs that potentially price isn't going to push any higher than it has done from 651 up until 701. So once we've got those signs of bearish momentum, we are looking for the previous low to be broken. So there is that shift from the bullish momentum to bearish. I like to see price try to push up, because if it's lower lows and lower highs, eventually buyers are going to step into the market, because obviously price can't just keep pushing down. So we want to see buyers try to push the price up and then fail to be able to do so, because that shows that we have gone for making lower lows, lower highs. So people are selling here, then buyers have their chance to push the market back up, fail, and then price continues in our direction. Now, what's important from an hourly candle perspective is that the current hourly candle that we're trading is in line with our direction. So we're selling based off how the previous hourly candle is closed, and then at 7 a.m. price opens here, tries to push up and fails. So once we've created that top wick, we're looking for the candle to flip into our direction then, and then also be bearish. So we enter the trade once price breaks a low and is also in our direction. So this is potentially another opportunity here. So after we've had that bearish candle close, we can see that we do actually start making higher highs and higher lows. If we go down to the line chart, it just illustrates it a bit better. Higher highs and higher lows. We then fail to break the previous high, which is here. So when the 8 o'clock candle comes, we then get that shift from making higher highs and higher lows. We then make a lower high and break the previous low. And when we enter, we are also bearish on the current hourly candle. Now, I'm not that fussed on this type of pattern, even though that was another winning trade. But from backtesting data, it's much better to see price clearly in an uptrend. Even though there is an uptrend, it's just not as clear. For me, price is moving sideways during this time. So if price is moving sideways, yes, it can continue down, but I much prefer to see price clearly pushing up. So this is a bit more subjective, because we can say that price is pushing up. So we've made the low and then we've violated this previous high, which is here. So we've made a higher high. So we can say that yes, price is pushing up. However, that is clearly more sideways than this price action here. So I much prefer to see price clearly try to push up. So we're giving buyers an opportunity to push the market further up. I just much prefer to see that, as opposed to price is moving sideways here. So potentially buyers are yet to really step in the market and push price up. Yes, they have pushed up here a little bit, but I much prefer to see these clear patterns where we've pushed up, failed, and are now going to continue down. So here's another opportunity. It's literally unfolding now. It's 36 minutes past 10. If we look at the 9 till 10 candle, we have closed bearish. It's not a particularly strong bearish candle, because we've got this huge bottom wick where price has tried to push down and failed. However, objectively, it is a bearish candle. And like I say, what we can use this wick for is to look for an entry, because this wick is where price has tried to push up. Now, hopefully you can see that this is a lot more of a clear trend upwards as opposed to this. So this is the price action I like to see, where we've given buyers an opportunity to push price up and they've failed to do so. The only thing with this one is it's a little bit messy from a lower high perspective. I mean, there is a lower high formed here because price has made this highest point, then come down and made its low, pushed up slightly and made a lower high. It's then broken the previous low. I mean, it is a trade. It is a trade. We could have been taking a sell from there, and we are bearish on the hourly candle that we're trading. So what we'd have to look for here is stop loss placement. Now, obviously we want to include this previous wick. So once we have to include that wick and we're no longer on a whole number, I always round up to 0.5. So stop loss is either a 0 or a 5. So it's either 2 pips or 2.5 pips. And I use a minimum stop loss of 2 pips. So it's 2 pips or 2.5, 3, 3.5, all the way up to 10. So we never have like a 2.2 pip stop loss. Now, whether you get stopped out of this one, I'm not sure. But say you had a 2.5 pip stop loss, you're either going to get stopped out or price continues down. So there's 2, potentially 3 trade examples if you were to take this one, just from this morning, just from using how the previous hourly candle is closed. Now, they were sell examples, but obviously the opposite is true for buys. So Monday, we have this bullish close from 7 till 8. We can see that there. So we start trading at 8 o'clock. We can see during the end of the previous hourly candle, we start making lower lows and lower highs. So we're clearly bearish. We're not moving sideways, clearly bearish. Now, another thing that I like to see is I like to see price action closer to the previous lower low. So we're looking for that lower high shift because price has been pushing down, failing to break this previous low, broken the previous high. Now, this is what we like to see. However, I like to see price action being closer to the lowest point. So if price was a bit further down here, it just gives us more range to take advantage of. Whereas with this, the shift is a lot higher. So we'd have to look for the break of the high there. Stop loss then has to be bigger. Like I say, I do take a maximum of 10, but it's rare that I do that, and I am trying to do that less and less just to get those really tight entries. So with this one, we have to break the high. We are bullish on the candle that we're trading, but we're all the way up here because of the stop loss is quite big. Now, I think potentially this works out, but you'll be sat in this trade for a while, and I like to be in and out of them as much as I can. So yeah, it did work, but it's just a lot more messy with this. I like price action being a lot closer to the low. So make that lower high here, and then we break the high a lot sooner while being bullish on the current hourly candle. That's what I prefer to do. Now, obviously, this works a lot better in trending markets, like most trading strategies do. So if we look, when price is trending, price seems to go in one direction, then the same direction a lot more than when we're trapped in ranges like this. And then once we break out of this range, we then continue upwards, so we're more likely to have a winning trade there. Like yesterday, for instance, there was a lot of this sideways movement. Now, this sideways movement isn't good for us because we're looking for a continuation. So if one candle closes bullish and we're looking for buys, it then closes bearish, then bullish, then bearish, and it's literally opposite candles. Now, eventually, this is something I'd like to try and figure out how to take advantage of. However, for now, like I said earlier in the video, I just like clear, easy trading strategies. And this for me is obviously just sideways. Once we've broken out of that, we can see that we've only had one bullish candle in 8 or 9 hours. The rest of them have been bearish. So we've broken out of this range and now people are selling. Now, until we can figure out how to take advantage of these ranges, it's best to stay away and either wait for price to clearly be trending, which it does a lot because it's the hourly chart. So we don't have to wait for that long for price to get out of this range because every one of these candles is an hour. It's not 4 hours or the daily or whatever. So we can just wait at this point, especially if you've taken 2 or 3 good trades and you're up, let's say you're up 2 or 3% on a 100k account. It's a lot easier to stay away. What we can be doing is, while price is trapped in these ranges, we can just be looking at different pairs, because I haven't actually backtested this on different pairs yet. I have had a lot of comments asking if this works on gold or whatever, and it's something I will be doing shortly, backtesting videos of different pairs. For now, I just concentrate on Great British Pound US dollar, but there is opportunity while price is trapped in these ranges to trade other pairs. So let's say yesterday we can see that we are trapped in a range on Great British Pound US dollar. Let's have a look at AUD USD to see what that did yesterday. I mean, it is still a USD pair, so potentially it may have been moving sideways too. But yesterday we can see that price is moving a lot more. Got stuck in a range around the same time as we did on GU, but overall we can be taking advantage of some of these continuation candles. But then this morning, when GU has been moving, AUD USD has been trapped in this range. It's now breaking out of it, so there's potential for sells here. But while price is in these ranges, if you're happy to trade other pairs, me personally, I don't mind sitting back and waiting for price to break out of these ranges. But if you want to get involved in more trades, then just look for this on other pairs, which is something I will be doing in backtesting videos shortly. So make sure you subscribe so you don't miss those. So I really hope you enjoyed the video. If you have any questions about this strategy at all, please let me know in the comments. And thanks very much for watching.